we are in the midst of a 45,000 meter drill program. So we are aggressively exploring on the project and moving it forward. Currently, with the second phase of our drill program, we are focused on some very high grade shoots that we've identified on the project. So excited to be drilling again at Enchi and chasing some of the district scale exploration that the project provides.
Hello and welcome to the Assay TV. Today I'm here at 121 Mining Investment London with Luke Alexander, President, CEO, and Director of Newcore Gold. So Luke, thanks again for joining us here.
Yeah, thanks a lot for having me.
Always great to be able to catch up, but for those in our audience that don't know about the Newcore story, maybe you could just give us a brief overview of the company and your Enchi Gold Project.
Yeah, absolutely. So Newcore Gold, we're advancing the Enchi project in Ghana. It's a district scale exploration project that's fundamentally underpinned by very robust economics that we outlined in a 2024 PEA. We're now in the process of de-risking the project from a PEA to a PFS, which we'll put out in the first half of next year. And we think that can be a significant catalyst for shareholders. Typically, the market will pay a higher multiple for PFS stage projects. So we're very excited to be moving along that development path. And then secondly, we are in the midst of a 45,000 meter drill program. So we are aggressively exploring on the project and moving it forward. Currently, with the second phase of our drill program, we are focused on some very high grade shoots that we've identified on the project. So excited to be drilling again at Enchi and chasing some of the district scale exploration that the project provides.
Okay, excellent. And so you've had a really busy past 12 months where you've been drilling quite a bit at the project. You've put out some really excellent results so far. Maybe you can talk about some of the key findings from the drill results?
Yeah, so if we look at the first phase of our drill program, so far we've released roughly 29,000 meters, 231 holes. A lot of that drilling has been focused on resource conversion, so moving ounces from the inferred to the indicated category, which, as I mentioned, is one of the key things to move it to a PFS. But also within that drilling, we've been able to push some of the holes beyond the existing pits and have been making some good discoveries. We've also had some real standout results as part of this first phase of drilling. We've had our highest grade meter intercept ever on the project, 204 grams over a meter, but we've also had some nice wide high grade intercepts as well. So that's something that we're very encouraged with. And from an infill perspective at this stage, we think we've drilled enough meters to convert the ounces for the PFS. And again, now we're very excited to be focused on some of the higher torque, let's say, drilling that we've got on our project.
Okay, excellent. And so quite significantly, you increased your drill program from 35,000 to 45,000 earlier this year. So can you talk a little bit about kind of that decision making behind that expansion and, you know, what it really means for the project?
Yeah, so in September of this year, we had $3.8 million of warrant proceeds come into the company. So with that, we were obviously able to take that money and basically allocate it to an increased drill program. We now also have an additional $10 million of warrants that are well in the money. We're expecting those to come in between now and February, so in the next 3 months. And with those proceeds, we would then look to potentially increase the size of the drill program as well. Also, we would potentially have cash available beyond the PFS so we can start doing some full feasibility work as well. So everything that we're doing at the moment, the 45,000 meters of drilling, the work on the PFS, all of that is funded from the cash in the bank, but any additional capital come in would obviously allow us to, you know, grow the program well beyond that.
Okay, excellent. And so with this expanded drill program, you know, where are you focused next in terms of drilling? And
Yeah, so we've got a couple of different areas that we're focused on with this. All of our deposits remain open along strike, so systematically stepping out and expanding the mineralized footprint is something that we're looking at doing. We've got some parallel structures we've identified at our existing resource areas that we want to go and do some drilling on. We also have previously drill tested areas. So these are areas where we've historically drilled maybe 2,500 to 5,000 meters, made discoveries, but don't have enough mineralization there yet to wrap a resource around it. So all of these areas we're going to go back and do some follow-up drilling on. We look at that drilling as kind of, lower risk, systematic, lower cost drilling that can ultimately grow our resource and expand our mine life. And then the other thing that we're very excited about is, for the first time in a number of years, we're drilling some deeper holes, some deeper diamond holes on the project. If you look at some of the historical drilling, we've started to identify where some of these high-grade feeder zones exist on our project. And if you look at other deposits along the Sefwi-Bibiani belt from us, including our closest neighbor, Chirano, who's on the same structure, where a lot of those deposits and resource have really grown in size is as you start to identify and drill out these high-grade feeder zones. So we're excited to be back in with the diamond rig and testing some of these high-grade feeder zones that we've identified on the project. So, it's a combination of those two things, and obviously with additional discoveries, we think that will create a lot of value for shareholders.
Yeah, absolutely. So just to shift gears a little bit here, so the Enchi project is located in Ghana. Can you talk a little bit about any recent developments in the country? What makes it such a prolific mining jurisdiction?
Yeah, so I guess starting at a high level, Ghana is Africa's largest gold producer. It is the 6th largest gold producer globally. So with that, you've got a very supportive government. It's important for the economy. It's important for jobs, taxes, and also for us specifically, it means that there's a lot of skilled labor in country for us to leverage off of. In terms of recent developments, Newmont just put their Ahafo North project into production. That, in combination with Ahafo South, will make it their 2nd largest producing mine globally. So obviously having Newmont in country investing that kind of capital is important. We also have recently had Zijin come into the country. They bought one of Newmont's non-core assets. We have Shandong, who just started up the Namdini project, which a number of the listeners will remember Cardinal owned, and that asset was bought by Shandong. And we also recently just had an announcement from the government that they are cutting the 15% VAT tax for exploration companies. So I think that's another indication. And if you listen to the announcement that was made, they talk about how they want to see more international investment in the country. They want to encourage more exploration in Ghana. So all of those things, I think, ultimately point to what a supportive jurisdiction Ghana is and why we're lucky to have the project we do in Ghana.
Yeah, absolutely. It sounds like all things are kind of quite positive for working there. And so just to wrap it up, you've mentioned that you're working towards PFS in 2026. What else should investors be on the lookout for in the coming months?
Yeah, so the PFS in 2026, we see that as a major catalyst for the company. Obviously, the market will typically pay a higher premium for PFS stage projects. Once you're at a PFS, obviously the ounces have been de-risked with that tighter drill spacing. There's been a lot of metallurgical, hydrological, geotech work done on the project. It's been advanced from an environmental perspective. Then once you're at a PFS, you're also obviously closer to production. So from a discounted cash flow perspective, another one of the reasons why the market will pay a higher premium. And then M&A speculation goes up as well once you're at a PFS stage. As you de-risk a project, the number of potentially interested parties increases as well. So for all of those reasons, we think there's an opportunity to re-rate the company and the stock for shareholders. Beyond that, obviously, we're in the midst of a 45,000 meter program, and with the warrant proceeds that we expect to come in between now and February, there'll be an ability to potentially increase that well beyond 45,000 meters. So the market and investors can expect a lot of drill results from us. typically we've put drill results out every 6 weeks, 4 to 6 weeks. We're hoping to get some of the results out from some of this diamond drilling that we're doing at the moment by the end of the year. So drill results and then the PFS will be the two big catalysts for 2026.
Okay, excellent. Definitely a lot to look forward to, and we'll definitely be catching up again at our Cape Town event, if not before then. But Luke, I want to thank you for joining us here today on the Assay.
That's great. Thank you, Amy.
Thanks.